So traders, I just put a tab on my community tab up here. You can probably see this tab if I go back to my YouTube channel. If I go to my community tab here. Oh, by the way, if you go to johnsfreegift.com, you can grab a free training, or actually it's a free trading course. If you go to the community tab, you'll be able to see that I've just put this here. And I want to walk you through this right now when it comes to these, to what I'm seeing right now, when the overall big picture for you. So let's get straight into it. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's talk about this here. I want to talk about something that I think is really important. The amateurs of these markets, and probably 90% of you guys are amateurs in the markets, right? I've been doing this for almost 2 decades of my trading career, trading these markets. And the big thing that I really have learned over time is that one of the biggest mistakes that I made going back over my years is always looking at the now and thinking the now is always going to be. But if we actually think about that for a minute, okay? Think about that. Oh my goodness, things are really bad now. They're always going to be bad. Oh my goodness, things are really good now. They're always going to be good, right? And this is actually when you're investing in the markets, meaning you're buying, holding for many years, not just short-term trading. If you're interested in the short-term trading, then go over to that John's Free Gift. And then as soon as you put your email address in, not only am I going to send you the free trading course, but then I'll also give you access to a short video that I walk through my trading system and my trading setup and stuff like that. You'll be able to see that there. Again, it's all for free. Go get access to it. So that's one of the biggest mistakes that I always made, right? Why? Because I was so focused on the now. What am I feeling now? What are the emotions now? What's happening now? But what do smart investors do? Smart investors know, and I've only learned this now through 20 years of the market, market putting at the baseball bat sometimes, if you know what I mean, and giving it to me, because I've learned the lesson, right? And this is where a lot of people, they think, oh, what has been good is likely to continue to be good. And what is really, really bad is likely to continue to be really bad. But if we look at this from a sentiment point of view, and this is the Michigan consumer sentiment that I'm talking about right now. If we look at this from a sentiment point of view, or even a cycle point of view, how do cycles work? If you've got at least a 4 in front of your name and you look back, sometimes it takes, fortunately for me, that's happened, but sometimes it takes us at least having a 5 or a 6 in front of a name to look back and realize this is how cycles work, and this is how you can get ahead of the cycles, right? When things are really, really, really good, people are like, oh my goodness, Bitcoin's at 70,000, it's going to 1 million, let's go, right? It only did 600% in 1 year. Let's see, it's going to keep going for another 3,000%. Things are looking really, really good, they're going to do really, really good. Things are looking really, really bad, they're going to continue to run really bad, right? They always think about the now is always going to be, instead of just pulling back. But what causes that? What causes that in the markets, right? And what causes that when it comes to like things like this sentiment sort of image here that I'm bringing up here? What causes that? Let's go to here. What causes the whole thing here when it comes to the sentiment and so on and so forth? What causes what I just said there? It's what? Emotion. One of the worst things that I have ever done and did for a while was getting involved with the markets with my emotion about what is happening now and not looking forward, right? As an investor, it's so important to say, okay, let's actually remove our emotion. Oh my goodness, this is so bad, I'm gonna cry. Or this is so amazing, I'm so excited. Okay, let's pull those aside. Let's come back to just the center and say, okay, cool. What's the truth about history, right? Not what I'm fearful of, or of course YouTube channels and stuff like that are gonna come out and really give it to you, okay? Really give it to you about how bad it is and so on and so forth. Of course you're going to hear all that because things are really bad right now. But just because things are bad right now, does that mean it's always going to be bad? Something to think about. The answer is no, right? When are the best times to be looking at something? So I'm going to read this thing to you here, okay, that I just put on my, again, you can see this on my community tab if you go to my community channel, okay? The United States Michigan Sentiment Report. Remember traders, big thing about markets, market turns, they come when things look really bad. I've been saying that a big rally is coming second half of this year. If you've been watching my YouTube channel, short-term analysis, we're probably going to get some more downside. And I've been saying that, and that's happened 90% of the time. I've actually got that right. Okay. And that's actually happened in pullback, and I've actually made some really good money out of the drop. Okay. But I've also been saying that get ready for a second half of this year because we're like I see a big rally. But I've been saying that a big rally is likely to come second half of this year because long rates will drop. And I believe, and again, guys, people, if you get sucked in, what's been happening right now lately for the last 6 months or so? Yeah, interest rates have been what? Spiking. This is the interest rates here. Look how vertical this spike is. Oh, but John, it's going to keep going up. It's going to keep going up. That's your fear speaking. Fear, right? What is this doing right now? This is creating one big, massive vertical move. What happens every time we get the vertical move? We get a vertical move up, we get a pullback, right? Get a vertical move up, we get a pullback. It's the nature of law. It's the nature of the markets, right? So we're getting this is the 30-year. If we go to the 10-year, look at the 10-year. If we take all this up, this is actually the 10-year. Look how vertical that 10-year is. Nothing just keeps going like that. Nothing. There is a period of time of relaxation. Just like the stock market did in 2020 and 2021, right? What do? We actually went for an enormous bull move, especially in 21. What's been happening this year? We're getting a very nice pullback out of the markets. Oh my goodness, so bad, so bad. Hang on a minute. Let's just remove our emotions and let's look at this from a very simple point of view, okay? So let's actually go back to here. Because rates will drop, okay, we talked about that. Inflation will start to come down, okay? Again, what is the fear telling us because of all this emotion saying, oh my goodness, inflation's never going to stop. Come on. Okay, that's the fear. Throw that fear out the window, right? What's the reality of the situation? The reality of the situation is that we may get a little bit more upside with inflation, but it's not always going to keep going up forever. There's going to be a period of time when it's going to start to come back down, right? Things are going to start to happen again. Nothing goes, and again, the YouTube channels and the media want to get you sucked in because why? All you're thinking about is the now. Major changes are coming and we need to be prepared. But we can't be prepared if we're like, oh my goodness, this is so bad. I'm so scared. Oh my goodness. Like, okay, throw that emotion out the window. We can't think about that. What's the facts? And what do we need to be alert? Not to make rational decisions like, oh my goodness, okay, I'm going to go in. I'm going to start buying the market now. Like, I know we need to be smart. But we also need to be what? We need to be sitting down and say, okay, then what's the reality of the situation? And then I can make make a view on that. And then I can start to really watch the market closely to see what's happening. And what I'm talking about that is inflation drops, rates drop, and we're seeing the United States Michigan sentiment being the lowest in a long time. So many channels are talking about this, that the sentiment, and it's really bad and it's really low and really bad. Wrong. It's so bad, but it's so good. It's so bad, but it's so good, right? When was the right time to buy property? 2009. Wrong time to buy property. Last year. But look at the chart below. Every time it is bad as it is now, we are getting very close to a major bottoming in the markets. When things look the worst, the better the time to buy. I'm not saying right now, but over the next few weeks, I would expect to see a strong reversal first in the markets, which will in turn change the whole United States Michigan sentiment to go back up. The market moves first, the sentiment moves afterwards. Your number one coach, keeping you in tune on truth and what's really going on, smiley face. So let's go have a look at this chart here. As you can see, and again, remove emotion, look at facts. Emotions this time is different. Okay, let's actually remove the emotion. This is so bad, so good, fear, greed. Remove the emotion. Just show me the facts, okay? So I can make good decisions. Every time we've gotten below this 60 point here, this is the 60 line here. Guess what? Just before 1976, we got the spike through here, not through there. We did the same thing in, I'm pretty sure, was that 08? Maybe that was 08. But we got, look at that point there, and look where we are now. What does this all represent? Bottoms in markets. Why? Because after this time, stock market goes up, which allows people to feel a bit more confident as markets are starting to go back up. Things are looking really good. Things are starting to boing again. Boing again. Things are starting to bounce again. And then what? As markets start to go back up, people feel better. There's not much fear out there. Inflation starts to come down. Things start to happen. And then this goes up. What caused, again, this is likely to happen. That's the effect. The effect is the consumer sentiment's going up. But what's the cause? The cause effect relationship, right? The cause is, or the effect is, we're probably like, we're going to see the consumer sentiments go back up again. Okay, it's not going to stay down here forever. We're not going to be here 20 years from now and it's going to be at 40 and that's it. It's all over, right? No, okay, no. There's too much money out there, right? We're not there yet. We're not at a recession point yet. We're not there yet. Fear. Emotion. Throw it out the window, okay? Look what's happening now. This is the effect. The effect simply means the result. The result is we're going to see that again. Okay, so that's the result. But what's the cause? We have the cause and effect relationship. What's going to cause this to happen? Market's going to go up. People are going to be feeling a bit more confident, right? What's going to cause that? Okay, maybe rates are going to start to drop down. Inflation is going to start to drop down. You see what I'm saying there? So this is the result we're going to see. And I'm not saying back to 100 here. I'm just saying it may even rally back up to 60 or 70, maybe even back up to 80, right? But what's going to cause this up? This is the result, the effect. But what's the cause behind it? The cause is everything I've just said there: lower inflation, all that sort of stuff. So see what I'm saying? See how I'm putting the picture together for you here. So this is what we're probably likely to see here. And remember, traders, I want to bring you. Let's actually go back to here. I want to bring you back to a time. Look at this here. When was the best time to buy oil? When what? When things looked really, 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 really bad. Oh my goodness, oil was so bad, it's all over, right? Fear. In the moment. Right? You bought oil for there and you hold it for 2 years. Guess what? Oh my goodness. We're starting to see, isn't it crazy how life works? We get these extreme moves down. So when things look really, really, really bad, guess what? We're getting ready for turning points in the market. And I did this for the ES. Actually, it was the S&P 500, but let me go to this one here. Right, I did this on the S&P 500 as the whole COVID stuff started to happen. I knew people were starting to get fear, worried, all that sort of stuff. And then as this market started getting to the maximum extreme fear about what was happening right now, guess what I was doing? I was starting to, this is maximum extreme fear, right? We got the lockdowns, and it was actually interesting. The market drop, and this is when the lockdowns happened, right? And this is where they started to drop interest rates. This is when the lockdowns happened, and then this is when they actually started to do the printing of money. Guess what I was doing? I was loading up big time. 6 months later, the market rallies. See what I'm saying there, right? These fear times are the time to go long. I'm not saying to go long right now, okay? If you buy and hold, if you're buy and holder, then maybe now's a good time to buy. Okay, I'm not telling you what to do, but going back to this point here, traders, is that major changes are coming in the markets, and we need to be prepared by looking at the facts, not the emotions and the fear in the marketplace. Hey traders, I'm giving away 100% free access to my brand new Breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new Breakthrough trading course. So go to johnsfreegift.com right now. Go do that right now, guys. You can get full, complete, free membership access. Go do that right now.